Well, good morning, everyone. It's an absolute pleasure to be here with you and to be on the stage with three panelists, which I think are going to bring a very interesting perspective today. And that's what we want to tease out today is what is some of the opportunities around merchant payments and what would be the challenges in actually implementing a merchant payments product.
Okay. So for us, it's been a pilot with mixed outcomes, because we've actually implemented in a couple of countries, about 10 countries. We looked at it from two perspectives. The first is from the customer perspective. We have been fairly successful with winning payroll mandates, and so we pay a lot of salaries using Airtel Money. And because we have a number of our customers that receive payroll on a weekly, on a monthly basis, we felt it will not be very useful and profitable to allow them to cash out the entire salary as they receive them. And so the challenge is to expand the use cases so that instead of just cashing out, they can top up P2P and, of course, make payments in the regular shops where they go to buy their everyday needs. The second thing also is that it will also it has helped us expand the opportunities to reward them and to make them adopt the service and make it stickier. Secondly, being a fairly new service, we launched in cities. And because we launched in cities first before we started moving to rural areas. And therefore, we have a good number of our customers who already have bank accounts. Now, because they have bank accounts, they are used to a certain level of sophistication. And we're also lucky in the fact that in a number of our markets, you still don't have debit cards or credit cards. And even in markets where you have a debit card, it's still seen as an ATM card. And so customers are looking for convenience. They're looking for lifestyle. They're looking for things that a bit differentiate them in the marketplace. So that's on the customer side. On the retailers, on the merchant side, we've had a good number of retailers approach us, but they want to function as our agents, where customers can come and register, cash in, cash out. And we felt a natural extension would be to allow them accept Airtel Money, enable them accept Airtel Money as a means of payment as well. And for us, again, is an endorsement. If a big retailer accepts our service as a means of payment. And of course, for the HoReCa, hotels, restaurants, and cafes, turnaround time isn't much of an issue. I mean, if you're in a restaurant, you pay I think by the time you're through your meal, so there's no queue, essentially. Now, having said that, we also improved on the type of payments that we render with Airtel Money. Before now, it was strictly phone to POS. What we've now done is to introduce a code, a payment code. And so for retailers, as soon as you walk in, you generate a code. And when you've selected the items that you want and you get to the till, you present the code, they key it into the POS, key in the amount, and then the transaction just goes. So turnaround time is almost at par, if not quicker than cash. So that's what we've done so far. It's catching on and a bit successful in some markets. In some markets, it's yet to switch on, but it's progressing fairly well.
That's great. So we'll talk more about perhaps what are some of the reasons why it may or may not be succeeding. Sure. So thank you for that introduction. If I can turn now and bring Annie Smith into the conversation. Annie is joining us from Digicel, where she oversees 6 specific markets, as well as the international airtime distribution business in New Zealand, Australia, and online. Annie actually started her career with American Express Financial Advisors and has worked with Millicom Tigo in Sri Lanka, Laos, Tanzania, Ghana, and Rwanda. So Annie is going to take us to the faraway island in the Pacific called Tonga. And Annie, can you tell us precisely what is the merchant payment product that you've launched there and how it's going?
Yes. Am I on? So yes, the Kingdom of Tonga is a small dot in the Pacific Ocean. And we've launched a fully integrated NFC contactless payment solution. enabling merchant payments through a point of sale terminal and, should I start over? Yeah? Okay. In Tonga, we've launched a fully integrated NFC contactless payment solution with any mobile phone using an NFC tag or sticker. So it integrates the mobile money wallet with a NFC payment solution.
And how long had your mobile money product been going before you launched merchant payments?
Sure. So we launched in Tonga in early 2011 with mobile money. It was going quite well. We were seeing, similar to other operators, we were seeing a lot of traction with airtime top-up and various peer-to-peer payment solutions. Just no change from really what other operators have seen in the industry. We launched a USSD-based merchant payment solution in October of last year. The experience is quite clunky. It takes about 45 to 50 seconds to go through the USSD strings in order to make the payment. From a user experience perspective, not great. So we decided to challenge this and introduce an NFC contactless payment solution, which it takes about 7 seconds to make a payment. It's actually faster than cash, which was our benchmark. So what the purpose of this was to try to create more of a better user experience, more convenience to help drive adoption of the services, and then all of the follow-on effects that you can have and opportunities from NFC payments.
Great. So we've heard now from two sort of operators' perspective and talking about how an actual e-wallet, your mobile money e-wallet, can be used to directly pay for goods and services at a point of sale. But of course, before e-wallets, we had credit cards and other forms of payment modalities. And so I'd like to now bring William into the conversation. And William is joining us from Greenwich Consulting and is in the unique position of having the experience with telcos, but also talking to banks and other parties. So just
So I think there are two sides of the question. First of all, when we look at having merchants who are not yet equipped to receive digital payment, usually, obviously for acquirers or traditional banks, it can be quite challenging to penetrate that merchants for different reasons, where the traditional POS is very expensive. It's like $400, $500, or $600 sometimes in some countries. Sometimes they don't have a fixed line even to connect it, etc. So obviously the mobility aspect of your acquiring solution becomes very viable and is obviously the way forward. So hence, obviously having an e-wallet proposition for merchant is a very interesting solution, because all these merchants who don't so far accept digital payments, that's a way forward. At the same time, the challenge is suddenly you're shifting your traditional role as an MNO, and what I've seen in different countries is the acquiring, what the traditional banks call acquiring, which is actually having or taking care of the merchant side of the financial services, is a slightly different business as launching traditional mobile money to consumers, which is more seen as the issuing side. So obviously you will have to suddenly put into perspective that you're more into a B2B business. So obviously you will need as well the expectation from the merchant could be different. The traditional expectation for merchant is, let me accept all cards, let me connect to card scheme networks and bank networks. So obviously the mobile money solution or e-wallet for merchants suddenly has different challenges or expectation from the merchant side.
what is the value, and do you really believe there is demand for this product?
What we've done a couple of things. Number one is we've extended convenience to the customer. I mean, there will always be a limit to the amount of cash that you carry in your wallet. And so it is convenient. It's better than cash in all cases. And so you can actually shop at any time of the day, because your wallet is funded. Again, remember when I started, I talked about the fact that we're very strong with the payroll customer. So the funds are in the wallet already. One option is actually to go and cash out and pay the high cash out fee, or you can actually go to the retail outlet and then spend straight from the wallet. So it's cheaper and it's more convenient for the customer. So at this level, we are heavy on driving pushing incentives to change customer behavior. And
What,
so
what
we
type
look,
of incentives would those be? Give us an example of how
And
you
all
might
sorts.
encourage a customer to use this product.
yeah, for example, we can give, if you record a number of transactions, if you reach a particular threshold, we can give you free, maybe a number of free SMS or free P2P, or give you a discount on airtime. So we do a bit of that just to drive the sort of behavior that we want the customer to embrace. And so being an extra use case from a customer point of view, it's, even though in some cases it's still fairly challenging for the customer, but he recognizes that this is an opportunity to get something at the end of the month or in return. And so they're willing to go through that hurdle to undertake those transactions, and so that they can actually enjoy those benefits at the end.
And when you talk about convenience, the convenience factor, does that mean, you mentioned people may not want to carry large amounts of cash, does that mean this is going to be a product for high value transactions, or do you think it'll cut across the spectrum of retail purchases?
Now, we've been very deliberate in how we've deployed these POSs. We've essentially focused on the retail outlets and the hotels, restaurants, and cafes. We've not looked at the small retailers. And so for now, the value of transactions are slightly, within the mid to upper tier in terms of the size of the transactions. We've deliberately left out the lower rungs. Again, because it's a pilot and we're learning, and we are working on different models for a more mass approach to merchant payments. But right now, we're strategically targeting those middle segments, middle to high segments.
Annie, what's been your experience? Has there been customer demand, and does that cut right across the spectrum? And how have you dealt with the issue of people getting the cash in the wallet? Are you looking at salary pay like Chidi is in his markets?
I think we all know every deployment is very different. The attributes in the market are very different between various operators. So for us, we launched big when we introduced our merchant payment solution, and we canvassed every segment: retail, bars, restaurants, small value, high value, to make it as meaningful and as widespread as possible. So we actually have covered 80% of the principal retailers, restaurants, bars, everything as diverse as paying your waste management bill. You can do through a contactless payment. So for us, we wanted it to be as relevant to a consumer as possible. Now, the one thing for us that was a key challenge is from an agent perspective and a merchant perspective, we have real liquidity issues in our market. So to enable a full ecosystem of merchants to accept payment was a way for us to try to reduce the number of cash outs, because that really challenges the service. In Tonga, about 40% of the economy is based on international remittances. So that's part of the product portfolio that I have as well, is to drive the remittances into a mobile money wallet, so it lands in a mobile money wallet, and from that, again, trying to control or provide an alternate means of using the mobile money outside of just the cash out, which can be problematic in our agent network. So for us, it was about user experience. It was about solving a distribution challenge, or providing an alternative to a distribution challenge, and then making it as meaningful and as relevant to a customer, so now you can pay your bills. We do have salary clients as well, so some people get salary payments, some people get international remittances, pay your bills, top up, etc. And there's a whole suite of incentives that go around to support that. So in terms of customer demand, we're creating a customer demand. We're creating an experience and trying to really position this as a great experience for a customer, but there was not inherent demand in the market.
That's great. But both of you have pointed out this very key concept that there needs to be cash already in the wallet. There needs to be stored value. Let's bring William into the conversation and talk a bit about how is the merchant going to get acquired. I think what we've heard here is that they've looked for the types of merchants which perhaps their customers would want to engage with those customers already having some value in the account. But what's been your experience to merchant acquisition from the world outside of telcos, and how do you see this perhaps shaping up as we go forward with both the e-wallets and cards in the mix?
Well, one of the steps I've seen is trying indeed to link potentially some of these e-wallets as well with companion cards. So that's one thing. Again, the idea is to remove the filters of just having a M-wallet holder with a M-wallet merchant from the same MNO. So get out of the closed loop environment from the end-to-end transaction. So one way, or the first deal that are happening at the moment, is MNOs obviously trying to make a deal with some of the card schemes, bringing or linking a companion card not to a bank account but directly to a M-wallet. So that's step number one. And obviously at the merchant, you can accept obviously the payment. That's number one. But after, the way obviously to segment your approach, if you as an MNO want to acquire a merchant, where you enter into I would say a classical segmentation of merchant project, which is obviously where your most where the most transaction happenings, the higher number of transactions at shops, the most feasible segments to deploy your M-wallets and your marketing campaigns there, etc., etc. So it's in a way you duplicate your segmentation profile from your consumer, but more on the merchant side.
And you've alluded to the possibilities of M-Post devices being able to bring down the cost of merchant acquisitions as well. I think you're starting to see that now.
Yeah, most acquire I've been working with most of the banks are both issuer and acquire. Then in some countries you have acquire specialist. But in a lot of cases, acquiring is a losing money business for the banks, or it's a very tiny margin, obviously, money business. So the cost of acquiring, given what the traditional post capex is a very heavy barrier that you remove obviously with M-wallet. But then this is the cost of acquiring with face-to-face. People used to go and sign, a restaurant or etc. So the way actually we see the acquiring business moving is to go towards low-cost distribution channels. So finding way not anymore to have a sales force going around and sign up doing the KYC and AML of the merchant one by one, which is very resource extensive, but just to drive people, towards telesales, towards online subscription, towards obviously picking up potentially some of the solution at the kiosk and retailers. So to have the merchant come to you rather than doing a traditional banking acquiring business, which is face-to-face and quite resource extensive.
Chidi, after the preliminary results of some of your pilots, do you see a merchant acquisition strategy which would more closely mirror what William's talking about, or more closely mirror what Annie has described, where they've been able to penetrate the markets themselves as a telco?
Well, from an acquisition strategy, our roadmap is very clear. What we've done so far is that we've used in-house teams to go out there and secure the merchants. That's quite limiting, because there's a limited number of people you can actually have in-house and dedicate to merchant acquisition. And so we're in discussions with a number of companies. You can call them aggregators, you can call them PTSPs, payment terminal service providers. And I think from January, we'll be launching the first one in Tanzania, where we'll have a third party help us win merchants, train them, deploy the point of sale, and manage those relationships on a revenue share basis. And the second reason why we're doing that is because we don't want to invest in those terminals. And so we've deliberately looked out for the aggregators that will invest in the terminals, maintain them, support them, and of course train and own the merchant or co-own the merchant relationships with us, and then we split the revenue down the line. So that is our approach going forward with respect to merchant acquisition.
Of course, with the card business, there's a fairly typical pricing structure whereby the merchant is the one who has to absorb the cost. For Chidi and Annie, do you see in your markets the merchants being ready to accept that cost of an electronic payment instead of cash? Or do you see them trying to push back, and are you pressured to look for more creative pricing approaches for merchant payments?
Let me just, for now, in our own case, the customer pays, but it's a token, just a little token, because we think at this stage, we need the merchant support, we need their involvement, we need their endorsement to help kick off the service. At the end of the day, we will adopt the card standard. The merchants will pay at the end of the day. But right now, the customer pays, but we made it as minimal and as little as possible.
We're a good team because we're opposite. We have the exact opposite model where the merchant pays for the service. And so this, again, for us, it's about driving user adoption and acquisition of customers from a mobile money perspective. So we wanted to reduce the barriers to entry for the consumer as much as possible. So we've adopted more of a card-based pricing approach.
We've talked a bit about customer demand, we've talked about merchant acquisition, we've now touched on pricing. Perhaps the final area is technology. We have on the stage one group who's gone the NFC route. We hear William talking about companion cards, and we hear Chidi talking about a slightly different approach. What's the panelists' view on what will be the technology that dominates merchant payments?
I absolutely believe in the NFC contactless payment, and we've deployed Verifone, so we were there, the first to go with the Verifone POS terminals. So for us, it's about it's an NFC tag, an NFC sticker that is on any handset. It can be on the lowest end handset that has USSD capability, just to support the rest of the mobile money products, all the way up to smartphones. So it's really made it a ubiquitous mass market product for consumers. So from my perspective, I feel very strongly that we've leapfrogged with mobile money and introducing a mass market ubiquitous payment solution for our markets, and it's very exciting to see it. So that's no question on where I stand.
I mean, without doubt, NFC is the way to go. Again, this is Africa, so it will take us a little more time. We will start a pilot next year by Q2 in a couple of markets. And in some select markets, we will introduce companion cards. Companion cards where the funds will be in our wallet and not in the card. And so the card essentially provides access to the wallet, especially in markets where ATMs are pervasive. So we actually experimenting that, and that will also happen early next year as well. But NFC ultimately is the way to go.
Yeah, I will tend to agree. One of the challenge at the moment is more, if you look pure at the acquiring side for the merchant, is the cost of the reader. Obviously now you tend to find solution where even like a small dongle like the Square in the US, where potentially they are moving to accept all cards, not Square but like other companies, and you can put potentially an NFC chip, but like it's $20 potentially, these kind of devices. So suddenly on the merchant, you will be able maybe to accept mobile money and cards for $20 million instead of $500 million. So I think that's one of the big challenges. I don't know, Annie,